Hello and welcome to our channel KKB Financials. Now, after why should I invest, the obvious question comes to your mind is where should I invest? These are some of the options: stocks, mutual funds, and exchange traded funds, ETFs, bonds, real estate, commodities, savings accounts, FDs, and cryptocurrency. Let's understand them. Stocks. Purchasing shares of individual companies can offer high returns, but they also come with higher risk. Stock markets can be volatile, and also individual company performance can vary greatly. Mutual funds and exchange traded funds, ETFs. They pool money from multiple investors to buy a diversified portfolio of stocks and bonds. They provide diversification, which can lower risk, but returns depend on market performance. Bonds. Bonds are generally considered safer than stocks. They represent loans made to governments or companies, and you earn interest over time. While they offer more stability, the returns are usually lower than those from stocks. Real estate. Investing in property can be a good way to diversify your portfolio. It tends to offer stable returns, but it requires substantial amount and can be less liquid than other forms of investment. Commodities. Precious metals like gold and silver or other resources like oil and agricultural products can provide a hedge against inflation. These tend to be more volatile, so they are often used as a smaller part of an investment portfolio. Savings accounts and FDs. These options offer the lowest risk but also the lowest return. They are ideal for short-term savings or as a safe place to keep liquid funds. Cryptocurrency. Digital currencies such as Bitcoin and Ethereum have gained popularity in recent times as high risk, high reward investments. However, they are very volatile and can experience significant fluctuations. Currently, it's unregulated in Indian market. Stay tuned for next episode. Don't forget to like, share, and subscribe KKB Financial.